attendees are in listen-only mode.
All right, welcome, everybody. We're really excited to have you here with us today, whatever time of the day it is that you're listening in, whether it's morning, afternoon, evening in your part of the world. I've been chasing this guy down for quite a while now, and he's extremely busy. And so we're very, very grateful and blessed to have Mark with us today. And Mark essentially is the foremost expert in this industry. He's founded a lot of different companies. His recent company is called TaxJar, and he's come to us from beautiful San Diego, California. And essentially, what it's really all about, guys, is when you're selling online. If you're selling wholesale to retail, obviously you have all those different things rather than just a retail arbitrage. You're going to have to know the basics, or at least have somebody to help you. And he is the foremost authority expert on taxation for sellers in the e-commerce space as well. And there's so many things that are changing in the environment, so many things that are changing in the US and internationally, particularly here in the US. And if you're selling in the US, this is the guy that you want to have on your team. This is the guy that knows his stuff. And he's on top of all the changes as well. So I'm extremely happy to have him with us. So with no further ado, Mark, if you want to take it away, it's all yours.
Thanks, Larry. Great to catch up with you finally, and thanks so much for the opportunity. Hi to everybody out there. I'm going to do my best to share a lot of knowledge with you for the next probably 40 minutes or so. This is a presentation that I've been lucky enough to share with a lot of folks over the last couple of years, and I'm hoping that you can walk away feeling a little bit more equipped to make some decisions that are best for your business when it comes to sales tax. And Larry, if you have questions at the end, more than happy to go through those with you.
Awesome.
Okay, so here's what we're going to talk about. We'll go over what I call the general rules of sales tax, the 3 steps to autopilot. So really, how you get you and your business focused on other things other than sales tax. There is a way to do it. It's a challenge, but you can get there. I'll talk about sales tax legislation and some resources that can help you going forward, help you keep you informed about what's going on in this crazy world of sales tax. And then again, happy to take some questions at the end. So really quick about me. All you need to know, and Larry, thanks for the nice introduction. Really what it comes down to for me is I love using technology to solve complex problems. So I guess I'm sort of a glutton for punishment in the way that I understand that small business owners, I've been a small business owner for more than 10 years, there's a lot of things that get in the way of you doing what you want to do, which is make more money and grow your business. So I'm sort of a glutton for punishment in the way that I like taking those challenges on and try to eliminate those things so that you can focus on what you want to focus on. And sales tax is a pretty darn good example of something that can get in the way, take up a lot of time, in some cases take up a lot of money, and just distract you from what you need to be doing. So I am the founder of TaxJar. We've been around for since June of 2013. I've founded a couple of tax products previously, so I know the space pretty well. I'm also really familiar with working with small business owners. Like Larry mentioned, I'm not a CPA or a tax professional, but I have put thousands and thousands of hours into this, not only researching, but talking with tax professionals, talking with folks that work at the state tax departments, auditors, lawyers, you name it. So really my goal, again, is to just share what I've learned with you so that you can feel good about trying to wrap your head around how to be sales tax compliant and how to make some decisions. So with TaxJar, I talk to a lot of people every day. We're big believers in talking to our customers, but this is typically who I talk to, which probably rings true for a lot of you folks that are listening. A lot of folks are multi-channel FBA sellers. So what I mean by multi-channel is they're selling on Amazon, but they're also potentially selling on eBay, and maybe they have their own website. In some cases now we talk to folks that are also using something like Square or PayPal here to go to trade shows or craft fairs, or any place that makes sense for them to sell their wares. They're collecting sales tax in different accounts, and they're using platforms that help them collect sales tax, but that's about it. They're on their own. So if that resonates with you, or even if you're more of a beginner, I think you're going to get a lot out of this today. And typically what they say, kind of funny, is, I just want sales tax to go away, and I don't have the ability to obviously legislate and make something like that happen as much as we'd probably all like that to happen, but I can help you kind of navigate through the space. So let's just go over some of the general rules, the things that I think are kind of most important if you're trying to wrap your head around this stuff. The first one is pretty obvious, but sales tax is unfortunately complicated, and a lot of that is due to the fact that there's no federal legislation, there's no federal governing body, there is no IRS for sales tax. So instead, what we have are the situation is left up to the states. So we have 45 states and the District of Columbia that have their own sets of sales tax laws. There are some similarities, but for the most part, it's kind of safe to assume that each one is essentially its own country and has its own set of laws. It's really all about nexus. Nexus determines when you have to comply with sales tax laws. It also has a big determinant around how complex your compliance will be. In other words, how many hours you could be spending on this. It's important to know that sales tax is a pass-through tax, which basically means you pay what you collect. I hear a lot of folks talking about, well, I don't want to pay sales tax as a business owner. And if done right, you shouldn't be paying sales tax out of pocket. You're simply collecting on behalf of the state, and when it's time to remit, and the state will tell you when your deadlines are, you're passing along the money that you've collected onto the state. So you should not be paying sales tax out of your own pocket under any circumstance. Sellers are known as collection agents. That's sort of the term that a state will use for a seller like the folks that are listening today. And a lot of that is around, right, the state doesn't have any way to participate in the point of sale when it comes to especially e-commerce, right? They can't sort of be part of the shopping cart or infringe in the sale in any way. So they're really reliant on you. It's a shame that the laws aren't simpler and they don't make it easier for you, but that's the reality of what we're facing as business owners here. Next rule is, again, super high level. I'm going to go into this in greater detail later, but if you sell to someone in your state, you're required to collect sales tax. So if you live in California, that means you need to collect on sales to customers in California. In your state, you'll hear me say this several times, your state is really the best place to begin being compliant. Remote sales, you don't have to collect sales tax, at least not yet, as we're recording this. So remote sales are sales to any state in which you don't have nexus. I'm going to go through nexus in pretty serious detail here in a second, but again, from a high level. So if you live in California and you don't have to collect on sales that are made to folks in Washington unless you have nexus. So that's a pretty common question that we get, especially from beginners trying to figure out, do I collect from everybody and every sale to every state in the country, or is it just to sales of my own state, or how does this work? So again, it's the takeaway from this, and I'll go through it, is that you're really only collecting from folks who are in states where you have nexus. The other thing is that sales tax can be put on autopilot. So I mentioned this a little bit previously. It's a tough process, and starting your compliance is definitely the hardest part. There's a lot of hurdles that you have to go through. Once you get through some of the phases that I'm going to show you, you really can't put it on autopilot. And the example that I give us is a lot like payroll in a way. Payroll is something that if you have employees, you obviously have to do. It's not the easiest thing in the world, but there are ways to automate it and take it off of your plate so that you can go about running your business. And I think sales tax is a lot like that. And the 3 steps to putting it on autopilot, which I'm going to go through here later, are figuring out if you have Nexus, collecting an accurate amount of sales tax when you need to collect it, and then remitting the sales tax that you've collected and filing sales tax returns to the states when they tell you to. The states will set their own deadlines, and again, I'll talk about how they determine those deadlines in a moment. Okay, so let's talk about Nexus, the kind of the $1 million word here when we're talking about sales tax. The kind of simplified example or definition that I typically give is Nexus determines when you need to collect, and it's about when your business has a presence or a connection in a state that state says is significant enough that they want you to comply with their sales tax law. Okay, so Nexus means you have to comply. No Nexus means you are fortunate and you can go concentrate and do something else. So what does that mean when you say comply? What is that all about? Well, basically, if you're going to comply in a state, the first step is to register for a sales tax license in that state. You can't collect sales tax legally without a license. Okay? And if you think about it from a simplified example, if you're collecting sales tax and you don't have a license and you go to remit that to the state, they're not going to know who you are. They're not going to have your business on file, and they're not going to be able to basically take the money. So from a logistical standpoint, you need to have that license. And by the way, it's not a good idea at all to collect sales tax without a license. That's the one area that we see people get into like serious trouble. Like we've seen examples the last couple of years of people, they actually go to prison for this. So that's probably the biggest no-no and also the easiest mistake to avoid, right? Just don't do it. Then you collect sales tax on orders that are shipped to folks that live in that state. Okay, so it doesn't really matter if, let's just say I have Nexus in California. If somebody in Idaho makes an order from me, that doesn't matter as much as where the item is actually going to be shipped to. That's where a lot of the stuff, the tax is based on. So if the person in Idaho buys it but has it shipped to California, then sales tax comes into play. So just want to get that, make sure that that's clear. Then you file a sales tax return to the state and then pay what you've collected. And I'll talk more about in a bit about how often you may be required to file those returns. But again, the state is the one that's determining that, not you. So, okay, you understand what Nexus is. We know that it's some type of connection. Well, how do you get Nexus? Again, the most natural place where you already have Nexus is the state where you live, assuming that it has sales tax laws. The two most common that we see at TaxJar, again, on the left-hand side, where you live and or operate your business. So if you live in San Diego and sell out of your house, you have your inventory in your dining room or your basement, then you have Nexus in California, and you are required by law to comply in the state of California. The other one that we see a lot is what we call inventory Nexus. So this is where your inventory is in a third-party warehouse, right? A lot of us are using third-party logistics companies just because competition is getting so tight now, and if Larry is able to ship something, if we're selling the exact same things, and Larry can turn something around in 2 days and it takes me 4 days, I'm going to lose that sale to Larry every time, right? So it's one of the biggest ways we see folks kind of stepping up their business. The trick is that the inventory being stored in another state does count as Nexus. So if I lived in San Diego and I have inventory in Pennsylvania, the state of Pennsylvania says, I don't care if you've never been here, in your whole life, that inventory sitting in a warehouse in our state means you need to comply with our sales tax laws. So in this scenario, the seller, I would be complying in both California and Pennsylvania. I've got the note there at the bottom that I'm not talking about drop shipping today, only because that's like a whole other level of complexity. So if you are doing any sort of drop shipping, I highly encourage you. You can either check out the Taxstar blog, you can email our support team, or I highly recommend that you speak to a tax professional, because there's just too much complexity there to go through in a seminar like this. Okay, so the most natural question an Amazon seller would have after hearing that about inventory is, what impact does fulfillment by Amazon, also known as FBA, have on my compliance picture? And unfortunately, every what we call FBA state, the states where Amazon has inventory warehouses, says that your inventory counts as Nexus. So again, what does that mean you need to do? Well, by law, what you're required to do is register with each FBA state, collect sales tax in those states, pay what you've collected, and then remit the sales tax returns to the state. Now, we can talk later, if we have time, about kind of strategies how to make that happen, when the right time to start registering will be. I'm happy to talk more about that. Okay, so one really important thing to note is that Nexus for one channel, and again, when I say channel, I'm talking about eBay or Amazon or Rakuten or wherever you're selling. If you gain Nexus, or your business gains Nexus from one channel, that means your entire business gains Nexus. So a quick example: if you're an FBA seller and you have Nexus in California and Nevada, then you also need to be making sure that you're collecting sales tax on your eBay sales for California and Nevada. It's not just channel specific. So that's something that a lot of folks have questions about. I just want to be clear on that one. Okay, so what are the FBA states? We've got a map here, and this is changing all the time. But these are the states that we know of, that we've seen customers have inventory in through Amazon. And Amazon is not exactly forthcoming about the locations of these, but there are more coming soon. So just to give you an idea of kind of what your potential compliance picture could be like if you're an Amazon FBA seller. These are the states that you could potentially have to register and collect sales tax in. The two orange states, those don't have sales tax laws. So Delaware and New Hampshire, you're off the hook. So more states will be going online in the next few years. Amazon is aggressively building an infrastructure here. And they're also one of the biggest backers in federal legislation. So just my opinion as an aside here, I personally believe Amazon is such a big proponent of legislation because they are essentially tired of fighting with states on a case-by-case basis to do deals. If they can get federal legislation to go through, they will have a green light to fulfill their goal of having as many folks in the U.S. be on, kind of a same-day or one-day delivery schedule. And to do that, obviously, they need to build out a massive infrastructure. The only thing that's holding them back now is really tax relationships with the states. So do not, in my opinion, I would not expect the amount of states where Amazon is building warehouses to decrease by any means. It's only going to increase. Okay, so let's talk about collecting sales tax, and to do that, I have what I hope will be some simple examples to try to get this across and help it try to make sense. So let's talk about Joe Seller. He's based in Akron, Ohio. So he only has Nexus in Ohio. He's complying in just Ohio, one single state. When he makes a Nexus sale, that means he needs to collect sales tax. So the example is there's Joe on the left in his shop in Akron, and he makes a sale to someone in Lakewood. He's required in this case to collect sales tax. He's not required in the second example where there is in Ohio and he sells to someone in Florida. He's not collecting sales tax there because he doesn't have Nexus in Florida. Okay, so let's get a little bit more complicated here. His business is growing and he's using a third-party fulfillment service that stores his inventory in Nevada. So now Joe is, he's got Nexus in 2 states, Ohio and Nevada, and he's also complying in both of those states. Okay, he's registered for a sales tax license in both, he's collecting sales tax in both, and he's filing and remitting returns to both states. So when does he collect? Well, again, it comes down to a Nexus sale, right? The sale in this case is being made to Nevada. It does not matter whatsoever where the item is being shipped from, whether it's Ohio or Nevada. In either case, he needs to collect sales tax because, again, the item is being shipped to a state where he has Nexus. And same example, other way around, which is flipping around the states. The item is being shipped to somebody in Ohio, that is a Nexus state, therefore he needs to collect sales tax on that order. Of course, folks, one thing worth mentioning is that I'm assuming here that, I almost said Larry, but Joe is selling taxable goods, right? So just for the sake of assumption, I'm not talking about items that may or may not be taxable in some states. We're assuming that everything he sells is taxable in all states. In this case, he would not collect sales tax on an order shipped to Arizona, right? Doesn't have Nexus in Arizona, so he's not going to collect sales tax. Okay, now getting more complicated. Joe's really ramping up the business, and he's now using fulfillment by Amazon. Amazon has his inventory in 5 states, so he's got Nexus in 6 states, right? His state plus 5 others, and now he's complying in these 6 states. He's registered for sales tax license in all of these. He has started to collect sales tax and is filing and remitting returns. So really the important thing to remember here, and we've talked about this a little bit, is if you're complying in 5 FBA states, it's important to know that you're collecting in those 5 states regardless of the origin of the item. And I'll show you an example of this in a second. It's not just sales from the state warehouse to a customer in the same state. Okay, that's one common misconception. And by the way, this is exactly how Amazon collects, and they're doing it the right way. And it's also worth pointing out, again, that you need to make sure that you're collecting on all of your platforms. So, in Joe's example here for these 6 states, we're talking about Amazon, but he also needs to make sure that he's collecting on all of his sales on eBay, all of his, if he goes and uses Square to go to a craft fair in any of those states, he has Nexus in those states and needs to collect. If he has a website of his own, right? If he also is selling through his own e-commerce site, he needs to be collecting sales tax in all of those states as well. Okay, so in this example, a Nexus sale would be a sale that originates in Ohio. The items are in Ohio. If he makes a sale to any of those other states, those 5 other states, he needs to collect sales tax. And really, this is kind of a silly example, and people's eyes roll in the back of their head when they see this, but the point being, any combination of origin and destination results in Joe needing to collect sales tax, right? So if the item is in California and it goes to Ohio, he needs to collect. If it's in Arizona and it goes to PA, then he needs to collect. And again, the reason being is because those 6 states on the right-hand side, those are the 6 states in which he has nexus. So as long as the item is being sent to a state where Joe has nexus, he needs to collect sales tax on those orders. If he makes a sale to the state of New York, doesn't have to collect sales tax because he doesn't have nexus there. Okay, so we've figured out when we're supposed to collect sales tax. How much are we supposed to collect? That's kind of the next kind of logical question here that we need to think about. The buyer state is the one that determines the tax rate. So a tax rate, I don't know how many folks know this, but it's usually some combination of a state tax plus a local tax, and in some cases a special tax like an education tax, stadium tax, something like that. So you may see 7.5% in your shopping cart, but there's actually a few potential taxes being added together there. So in most states, that's the case. There are, in general, states fall into 1 or 2 buckets. The smaller one being an origin-based state. That's where the tax rate that you as the seller are going to be using to collect on items shipped to customers in your state, it's based on where you're located. And the great part about this is that that means you have you're only going to be using one flat rate for every customer in your state. So if you live in San Diego, well, California's not a great example, but let's use the Ohio one, or if you live in an origin-based state, I should say, again, the tax rate is based on where the business is located. Unfortunately, the larger bucket here, there are more what we call destination-based states. That's where the tax rate is variable because the tax rate is based on where the item is being shipped. So I'll go through some more detailed examples of this. Life would be a lot simpler if more states were origin-based. That's kind of the point here. Okay, so let's go through an origin-based example. Here's our seller in Akron. He makes a sale to a customer in Shaker Heights. The item is shipped to Shaker Heights. The tax rate is based on Joe's point of origin, which is his shop in Akron, and the tax rate there is 6.75%, which is a sum of the state rate plus county rate. That exact rate may or may not be accurate by the time you view this video. The rates are changing fairly frequently, but you get the idea. Now, an example of a destination-based sale, let's use New York. So the seller is based in Stamford. The buyer and where the item is being shipped to is in Buffalo, New York. Therefore, that's the place where the tax rate is based off of. And the tax rate in Buffalo is the state rate plus this giant county rate of 4.75%. So at a basic level, right, if you think about it, the seller in New York, it's more challenging than the seller in Ohio because potentially every sale that they make in New York could have a different tax rate because it's based on where the item is being shipped to. Okay, so what does that mean if you are collecting on Amazon? Well, the good news is that Amazon will collect sales tax for you. They have a tax collection service in Seller Central, and the cost is minimal, highly worth it, pretty much have no choice. Otherwise, you do need to pay out of pocket. I will say that Amazon, in my experience, we work with, I don't know, almost 10 platforms at this point. And Amazon by far has the most sophisticated advanced tax collection service of all the channels or platforms that we've seen so far. The really bad news is it's up to you to correctly set up collection in Seller Central. So it is very easy to end up collecting the wrong amount. And we see this dozens of times a day. Amazon does not do a good job in telling you not only how to set up tax collection, but they also don't tell you how to that you should be collecting in FBA states. So a quick example of how you could get this wrong is we'll use a destination-based state. Let's say you're in New York. You're required to collect not only the state tax but local tax. And the way Amazon does it, for those of you who haven't seen it, is Amazon basically has a checkbox, one for state, one for localities, basically county, city. So if you just collect state, then you're essentially collecting a flat rate across the entire state for all of your orders, because the state rate is always the same, right? It's the combination of state plus county and city that's variable. If you're not collecting the county and city, you're only collecting that single rate and you're not collecting enough. So if you've made that mistake, you are certainly not the first one to ever do it. It's something that we see all the time. And once you can get through that hurdle, then you will be collecting probably about as accurately as you can in e-commerce, thanks to Amazon's service. So this is something that we very quickly figured out very early on at TaxJar. Folks were really struggling with trying to get this right. So we put together this site. It's called FBASalesTax.com. There's an ebook there that you can download. It has a table at the end of it where it shows you, it's basically a cheat sheet. It shows you exactly how to set up your tax collection table in Amazon. Highly recommend it. It's folks have loved it and said that it saves them a ton of time. Okay, so we've talked about how to think about if and where you have Nexus. We've talked about collecting, both how to collect and theoretically how much to collect. Now let's talk about, you've collected sales tax from your customers. What do you do? And the next step is filing returns. So how often you file is usually tied to your sales volume. So the logic here, not to defend the states, but the logic makes sense, right? The more you collect, the more the faster the states are going to want their money, and they're going to ask you to pay more frequently. The most frequent you probably file would be monthly, and in between is quarterly, and then the least frequent would be annually. And again, if you're a smaller seller, and every state sort of quantifies that differently, you're probably going to be filing on an annual basis. And we see a lot of our customers who are multi-state compliant. They could be filing annually in one state, quarterly in 5 other states, and monthly in 2. So that's something that makes it a little bit more confusing, but there's no sort of uniformity to what the frequency requirements are. Okay, so it's important to also note that you combine and file a single return per state. So some folks think incorrectly that they should be filing one return for eBay, one return for their website, one return for their trade show receipts, and that's not correct. Really, the state doesn't care where the money comes from. As long as you're dealing with one single tax entity, they want you to combine all of those sales together and file one return. And by the way, they don't make you sort of delineate between, I sold this much on Amazon and this much on my website. They don't care. Really important to note that once you have sort of put your stake in the ground and decided to comply in a state, the state has an expectation that they want to hear from you. Okay, so if the state comes out and says, okay, Larry, we want you to file quarterly, you can't ignore that. So even if Larry goes on a 6-month sabbatical or vacation, or for whatever reason just doesn't concentrate on his business, the state still wants to hear from him. They don't know that Larry has made that decision. So they have an expectation that he will at the very least file what's called a zero return, which is basically saying, hey, look, I didn't make a dime in your state. I didn't sell a single sale. I collected 0. I owe 0. And the reason why that's important, Texas is notorious for this. If you don't at least file that, they will penalize you, and they will do it very quickly after the deadline too, by the way. I believe it's $50. So just by sort of ignoring your deadlines, you could cost yourself $50. So really important to keep that in mind. Once you make that commitment, you're going to be compliant. Don't forget about the deadlines, even if sales are slow or you just take a break from your business to go concentrate on something else. Really important to be on time. And some states give you sort of encouragement to do that by providing a discount for paying on time. They could give you between, we typically see 1 or 2% back on what you owe. There's not a reason I've ever heard of why you wouldn't do that. It's free money, especially for the larger sellers listening to this. If you're doing significant volume and collecting significant amount of sales tax, that's money that you get to pocket. Unfortunately, not all states have that discount, but all of them do have a system in place to penalize you if you are late. So, of course, we don't like that. They have some combination of late payment charges and interest on what wasn't paid. We see to varying degrees of sort of enforcement on this. I would say in general, states are fairly lenient for first offenders, so to speak, but they don't like repeat offenders. If you're routinely late, you're on their radar now, right? So they are probably much more likely to assess you some type of late payment charge in addition to the interest. What we do see sort of anecdotally is first offenders, they may waive the late payment charge and say, look, we know this is complicated and it's your first time around or whatever, but you still need to pay the interest. The interest rate is pretty low, but the point being here, you start messing with this, you may start owing real money to the states, and that's just money coming out of eating away at your margins, and there's really no good rhyme or reason why you'd want to just put up with that. Filing returns in those destination-based states is a gigantic pain, so much so that it's really one of the fundamental reasons why I started TaxJar. The reason being is that you have to tell the states essentially how to divide up the money that you've collected. So you need to calculate taxable sales and sales tax collected by every jurisdiction in the state. And so if you think about it, let's pick on New York a little bit more. New York, if you send them a check for the $1,000 that you collected last quarter, New York has no clue how to divide up that money amongst all of its cities and counties, right? They're essentially sort of like a clearinghouse. You pay them, and then they divide it up and say, okay, Buffalo County deserves, $90, and Manhattan gets $50, and so on and so forth. But to do that, they need you to essentially do all the calculations. So it's up to you as the seller to aggregate all of those sales across all of your channels and compile them according to each jurisdiction. You need to tell them, okay, out of the $1,000, 90 goes to Buffalo and 60 goes to Manhattan, and so on and so forth. That's a big time drainer. And this gets really hard if you're multi-channel, right? So if you're using more than one channel because you've got a spreadsheet of sales from one channel with another spreadsheet in another, and maybe cash from your in-person sales, and it's up to you to put those all together. If you're filing in multiple states, this gets even more time-consuming. Here's a quick example of that. This is what the state of Washington's e-file, screenshot of what this looks like. Hopefully this is somewhat legible, but basically they're asking you, okay, seller, tell us what your taxable sales were in these different locations. So without something like TaxJar, for example, it's up to you to manually compile those totals yourself. Here's the way we've solved that, by the way. you can see here's what the state requires. Here's a report that you would get from TaxJar that basically has the exact information that the state of Washington requires. It has a listing of all of the jurisdictions. It has that annoying 4-digit jurisdictional code that Washington requires you to look up, and then it has the taxable sales. You just need to plug that in, and you can file your returns to the state of Washington much quicker. A couple notes about audits. Really important to be as organized as you can. If God forbid you face an audit one day, the word on the street is the folks that we talk to, tax professionals and the like, say that a sales tax audit is 10 times worse than a income tax audit. So there's really nothing you can do to prevent it. A lot of it is random, but if it does happen, it's really important to be prepared. And the more prepared you can be and the better organized you can be, the less time it'll take and the less expensive it will be for you. So important to save everything. If you file something on a return, you might have to prove it one day, right? So if you claim that you sold so much to this county in the state of New York, you better be able to back it up with the receipts. Same with any sort of deductions that you make, or anything that you're putting on paper and submitting to the state, just like you would do with the IRS, you better be able to back it up if they call you out on it. Managing, those of you that manage exemption certificates, for whatever reason, it's really important to keep that stuff organized as well. We got more on this at taxjar.com/states. If you want to read about what the requirements are for each state in terms of, they do actually do a pretty good job of, okay, you need to keep these exact records for this amount of time. Okay, worth touching on a very common topic of folks want to know about federal legislation. So here's what's going on as we record this session. Early in 2015, in March, the Marketplace Fairness Act of 2015, this is also called the MFA, was introduced to Congress. Again, at this point, it's just proposed legislation. It's a carbon copy of the legislation that was introduced in 2013. By the way, that legislation passed in the House and died on the Senate floor as the calendar expired in 2014. Sorry for the strong language, but this legislation, it totally sucks, and it is not fair for anybody that's listening to this today. So why do I feel so strongly about it? Well, first of all, let me kind of give you an overview of who and why and how you should care about this. This legislation is targeted at folks who have over $1 million in gross revenue to remote states. Now remember, remote states are those states in which you're not currently complying, right? So if you're complying in one state, a remote sale would be to every other state. If you're complying in 10 states, then remote sales would be to the other, quick math, 36 states that have sales tax laws, plus DC. Remote sales, in this case, now you have Nexus. So ignore everything that we've talked about here so far today. What this legislation would say is, if you are over this sales threshold, you now have Nexus in every single state in the country. That means you need to collect sales tax on every single sale and remit to every state. So overnight, your business could go from a nice, profitable, doing a few $1 million. You're complying in, let's say, 5 states, and if this legislation passes, you now have to comply in every single state that has sales tax law, which, in a business that's as competitive as the one that we're all in here, and margins are hard enough to come by, I just think this is completely outrageous because it causes a unnecessary compliance burden that will further decrease margins. So I'm really hoping that this legislation does not pass. optimistic, just given Congress's inability to really do anything, and the fact that 2016 is an election year. But we'll see what happens. One other important thing to note here is that sellers who are doing less than $1 million are not necessarily getting off scot-free. They're still stuck with the same laws that we've been talking about here today. So don't think if you don't qualify for this law that you don't have to do anything, because that's absolutely not true. You still need to comply with what's in place today. So when we think about the future of legislation, one other thing I think is worth sharing here is that states are starting to get, for lack of a better word, pissed off, and they're tired of waiting for federal legislation to happen. So here's a quote from a Democrat in Washington who basically said, we're not going to wait around anymore. We're going to take this into our own hands. And this we see is happening. So Michigan is a good example. Tennessee is another example where they are essentially expanding their nexus laws so that they can increase their taxpayer base to include remote sellers. And the sort of interesting thing about this is, right, state will do everything it can not to tax its own people, but what they're doing is they're finding ways to tax sellers out of state. They're desperate for the money. They want to keep their jobs. They don't want to tax their own citizens. But what they're doing is essentially expanding their laws so that they can, again, increase their taxpayer base and require more sellers to be compliant in their state. This is something definitely worth keeping an eye on. Again, this is not reliant on the feds. So there could be serious copycatting going on in the next couple of years, 2015, 2016, especially if states are able to see an uptick in revenues coming in from these remote sellers. Okay, so let's take a deep breath. Typically at this point, if we were giving this in person, this is what everybody in the room looks like, and if you do, I understand. I don't blame you. We just covered a lot in a short amount of time, and it's certainly not unusual to be frustrated and overwhelmed. That being said, hopefully you got something out of it. So, okay, where do you get started? How do you get started? Again, I highly recommend that you at least start to comply in your home state, and then branch out to new states, obviously just the ones that you have nexus. And I think a lot of this is based on risk tolerance. So this gets back to the question from earlier, when do I start complying in states other than my own? Having literally had thousands of conversations about this, folks typically fall into two camps, and I support both philosophies. The first is the person that says, look, I don't want to deal with this. I don't want to ever think about having somebody from a state contact me. I'm going to get all of this over with at once and not have to worry about it. I don't want to have to go to bed at night worrying that I'm not compliant somewhere. I'm just going to try to do the quote-unquote the right thing as soon as possible. Totally get it. And there's a lot of people that feel that way, and if that's how you feel, you're not tolerant of any sort of risk, then I highly advise that. There's another group that says, look, I'm just trying to build a business. I make 2 sales a year to the state of Indiana. I'm going to take my chance. Even though the law says I have inventory stored there, I'm going to take a chance that they're never going to come after me because I make 2 sales a year there. And personally, I think that's absolutely a fine way to feel, and I totally get it. As somebody who started a handful of businesses before, I highly recommend you focus on trying to validate your business first, then let compliance overrun you and cost you, a couple of months or however long it takes, when you could be trying to just focus on getting sales. So I'm kind of a supporter of that camp. I support both, but totally get that one as a business owner. Once you decide where you want to comply, then it's important to register in those states and remit sales tax returns when they tell you to. So the other kind of common example that we see is people are basically trying to figure out a way to stay awake. Um, and the question that comes out from those folks is, who will ever know? What does it matter um, whether or not I comply? And again, sort of jumped the gun here and talked a little bit ahead of the slide, but um, it's your decision. The laws, you've now been informed of what the laws say. Use risk tolerance as your guide. The things the tailwinds that I'll point out are, again, that the states are getting more desperate. They're taking things into their own hands. E-commerce is not going anywhere, right? It's exploding. So it's taken the legislation a long time, but they're starting to get more aware that there's, a lot of money at stake here with e-commerce. And federal legislation, even though it hasn't passed, it is further along, so to speak, than it's ever been before. Folks have been trying to pass laws federally with sales tax for 30 or 40 years now. Last thing I'll say is that what we've seen, and again, this comes from lots of conversations with states, with auditors, with tax professionals, best effort is always better than no effort. So in my opinion, the worst thing that you can do here is stick your head in the sand and do nothing. The states, when you talk to them, they'll say, look, we know this is not simple. We know it's complicated. At the end of the day, we're happy if you're complying. And if you remit to us $100 when the number actually should have been 105, so be it. And we're not going to come after you for the extra $5. That changes when we're talking about the Walmarts of the world or the retailers doing millions of dollars per quarter. Those will catch the state's eye much quicker, but there is some sense of understanding that this is not easy to do. I'm of the belief that it's impossible to be perfect on this, and the states just don't expect you to be. So a couple minutes real quick to talk about TaxJar. What we do is we allow you to connect where you're selling to us automatically. You just do it one single time, like an Amazon or PayPal, for example. We will, on a daily basis, pull down your sales and tax data, and then we use that to create what we call return-ready reports. So reports that you can use that to file your sales tax returns much quicker than if you had to do this on your own. We also have a feature called AutoFile, which will file your sales tax returns for you if you don't even want to do that last step your own. We have AutoFiles available in all of the green states, with more states coming soon as we kind of build out the ability to do that. We're integrated with all of these different platforms. I don't see Square on there, but that's one of the newest ones. So basically we can automatically take your sales from all of these different places and combine them together to give you what you need. If you create an account and you have data in there, you'd see something like this dashboard, which basically keeps you aware of your next deadline, how much sales tax you've collected to date, and it's kind of a gateway to your reports. You can see transactions sorted not only by state but by date. Tells you how much sales tax you collected for each one. And then here's another example. This one is an example of New York. And these are reports that you can take and file much quicker. We do have a report called the Detailed Sales Tax Analysis, and what this is sort of an estimate on, are you collecting sales tax accurately or not? We run the calculations that kind of on the back end based on what you're collecting to come up with this difference column on the far right hand side, and folks use that as a guide to figure out if they're on the right track to collecting. So it's helpful if you're not sure if you've set up your sales tax collection correctly, or if you're using something like PayPal, which only allows you to enter in a single rate for each state, or you've only collected sales tax for part of a filing period. So you're brand new to sales tax collection 6 months into the year, but you need to file for the other 6 months where you weren't collecting. People find it helpful. So how do you get started? Go to ecommercetaxhelp.com. You can sign up for a 30-day free trial. There's no credit card required. Just try it. Like if you have any curiosity, there's no risk. Go in there and try it. Get some data, get your first set of reports and see if that'll help you. We have both monthly and annual subscriptions, and our pricing is based on transaction volume. So how many, for example, how many transactions are being sent to us from Amazon and PayPal. And then we charge a fee if you use our auto file program, and we charge every time that we file a return for you. So lastly, we have these resources are worth keeping in mind. SalesTaxCommunity.com. There's a lot of online sellers talking about sales tax and concerns and questions that they have. They're really good at sharing information, helping each other out. We have our blog, and then if you need help on getting your settings right on Amazon, feel free to check out FBASalesTax.com. So Larry, I know that was a lot, but hopefully that was helpful.
All right, good stuff. So that's ecommercetaxhelp.com, ecommercetaxhelp.com. Go there. Wow, my head's definitely exploding. Unbelievable, guys. And I know yours is as well. And here's the thing. Don't get dissuaded from doing the business because of that. I mean, that's the underbelly, and it has to be addressed. And you said a good point. Some people just stick their heads in the sand. No, hit it head on. Get it set up right from the beginning, or fix where you're at currently right now. It's kind of like either the starting off program, right, or the fix it program. And Mark's the guy that's going to help you do that. Ecommercetaxhelp.com. When you go there, it's really going to help you understand a lot of things, and it's going to help you get started at the on the right foot. We do have a couple of questions. So what is the annual versus the monthly compared to the transaction, and ballpark, how much would that be then?
In terms of pricing?
Yes.
Yeah, so the annual will save you 10%. Okay. So for right now, let's say, for example, you sign up for our plan for up to 1,000 transactions. As of right now, that's priced at $9.95 a month. If you sign up for an annual subscription, that would go down to $8.95 a month, and you'd pay the whole thing up front. So you essentially get a month for free.
So guys, $9-10 a month. I would call it insurance. Extremely important insurance. When Mark talked about earlier, I've heard that too. That sales tax audit is worse than an IRS income tax audit. So just please, make sure you're covered, make sure you're doing right. This is definitely going to help you. Ecommercetaxhelp.com. Don't even think about it. Just go there. You got to get it, right? If you have an expert, then in addition, give them that's doing your taxes and so forth. Make sure that they're working with this and getting knowledgeable on that too. Would you agree, Mark, that perhaps some accountants aren't aware of these things that people have out there, and then they need to be educated on this?
Yeah. So what we found, Larry, is that the amount of when you kind of look at the tax professional group as a whole, the amount of folks that are focused on sales tax is pretty small, and then the amount of sales tax pros that have e-commerce knowledge is even smaller. So there aren't a ton of them out there, but for folks the ones that are out there are tremendous, especially the ones that we've interacted with. So for folks who have situations that are more complicated than what we talked about today, I highly encourage you to use those resources. If you need recommendations, I'm happy to make them. But it can never hurt to get a professional's advice, for sure.
Absolutely. Just for some things, I'll answer some of these questions. Pretty obvious. Guys, when Mark used the term channel, that's basically a website. So eBay would be one channel, Amazon's another channel. So just substitute the word channel for website, and essentially that's what they're talking about there within the industry. For those of you that are pros, it's obvious to you. A lot of questions here, but I know we have to run quickly here too. Can you give us some examples of things that would not be taxable? For example, what kind of product would not be taxable?
So clothing is not taxable in every state. Groceries are not taxable in every state. Um, those are probably the most common.
Okay, great. Another question. When people are applying in their states, that doesn't cost any money for the to be licensed to as a reseller for taxes. Is that correct? There's no fee for
Uh,
that?
in most states, that's correct. There are some states that do charge.
Okay. And so is there some states that call it a tax reseller license and another call it tax reseller certificate? Can you comment on that?
Um, some states that those things are different, some they are the same, but basically what you're looking for is the ability to collect sales tax. It can be different than um, what you need to be able to go in to a store and be exempt from on that transaction from having to pay sales tax. People get those two things confused. But really, what you want to get is the ability, the okay to collect sales tax in that state.
Hey, guys, when you go to ecommercetaxhelp.com and join, a lot of your questions are going to be answered within there as well. I would say pretty much all your questions would be answered for the most part. So, you know, 8, 9, $10 a month, it's well worth it too. Trying to pick through the best ones that would be applicable to everyone here as well. It is definitely complicated, no kidding, and it's something that we do roll our eyes in the back of our heads. Let me see here. Okay, so when you mentioned about that $1 million mark that they're trying to pass through, is that on gross sales or is that on profits? Was one of the questions.
Yeah, it's just on gross sales, and again, it's or not just, it's on gross sales, and it is in remote states only. So states with which you're not currently complying.
Okay. Just real briefly, because we know you have to go. You did make a brief comment about drop shipping. There's a lot of people that do drop shipping on here. Is how you said that's a little more complicated. Just give a quick summary. How is that different? What should people do on that?
So to take that in reverse, for sure they should speak with a tax professional on that. The reason why it's more complicated, it's just very dependent on a kind of case by case basis. And states handle this dramatically different. There are now basically three parties involved instead of two, kind of in your normal scenario. So I'm not sure it's even worth giving kind of a high level on this one, but it is really important to get good advice on this. Again, if people need, um, if they need to be pointed in a direction to get advice, we're happy to send them to a tax professional if they want to get in touch with us.
Right. Yeah, we have a bunch of guys that we work with as well. So support, guys, any questions, support at dropshipquick.com, support at dropshipquick.com. We'll make sure that we get everything handled for you in terms of any of your questions, pass on to Mark and so forth. Well, I think we had one more here that was kind of going through here. All right, what if, and I know I've heard you talk about this before, what if Amazon moves your inventory from one warehouse to another warehouse in a different state and you're not aware of it, and you don't have nexus in that state? How should you handle the sales tax? Or does Amazon do it automatically? How does that work?
Yeah, from what we know, once Amazon has your stuff, they are kind of at their own, you're at their mercy, right? So they could move it around daily without you even knowing it. And this is a real tricky part. That's why you hear folks that say, you know what, I know that my stuff, I'm doing significant volume. I know my stuff is going to end up in every state anyway, so I'm just going to get all the registrations over with up front. And you know, trying to track this stuff on a daily basis is fairly complicated. So I would say if you all of a sudden you notice that you have a nexus in a new state, don't necessarily panic. Um, use sort of reasoning that I talked about before, which is, okay, I'm going to figure out how much volume I have in that state first, and then just do your best to comply when you feel most comfortable that you should be complying in that state.
Does excuse me? Another question is: does Amazon alert you to let you know that your inventory has been moved to a warehouse in a
No,
different state?
nope.
So bottom line, guys, is play the safe route and just get it done. Just get it done correctly from the start too. What about other platforms, other websites? So Rakuten, I pronounce it Rakuten,
Yeah.
places like that. Um, how does that work? Do they have? Is it all automatically they calculate it for you? Obviously, we're ultimately responsible as sellers, but do they have some kind of using that as an example, some kind of an assistance on that at all?
Yeah. So the safe assumption on all these channels or platforms is that they probably have some type of service that you can enable to collect the taxes, but none of them do anything after the taxes have been collected. That's where you're on your own. Um, so unless you're using one of the lesser known kind of shopping carts, and there are hundreds of them out there, or if you're using kind of one of the more major platforms that you probably talk about with your folks, Larry, they probably have a way to collect sales tax, but again, they're just passing that money off to you, and it's in your hands to file those returns with the states. They're not going to help you do that.
Absolutely. One last question as well. What if somebody's doing retail arbitrage? So they're doing the sourcing on Amazon, selling on eBay. They're paying the sales tax themselves to
Yep.
eBay and having it shipped over to another party. Um, do they have to pay any additional taxes since they've paid the sales tax for the item?
Um, so what they're doing is not different than what anybody else is doing. If they're paying tax when they go and buy a bunch of stuff at Target, that doesn't mean that they're exempt from collecting the tax when they sell it on Amazon. So it doesn't really matter whether or not they've paid the tax. If when they sell the item, if that item is taxable where it's being shipped to, then they need to be collecting it.
So if they're paying the sales tax though based upon the destination, so let's say the person's in Idaho, the person that's doing the retail arbitrage, they're buying it from Amazon and they're paying the sales tax on the destination of their buyer in Ohio. They're paying the Ohio sales tax essentially too. Do they have to pay any additional sales tax since they're paying it on the destination then?
I don't think they have to, if I understand what you're saying, they don't necessarily have to pay any more or any less. It's just important to note that, if they're responsible for paying sales tax when they buy the item, of course they should do that. But more importantly, when they're turning around and selling the item, if that item is taxable and is being sold to a state that has sales tax laws and they have nexus in that state, they do have to collect it, even if they've already paid tax to acquire the item.
Okay, great. All right. In wrapping up here, any final comments before we let you go?
Well, I think I probably said enough for one day, but again, appreciate the opportunity to talk to people, and always here to help if people have more questions. And I'm a huge fan of entrepreneurs and folks that sell online, so I wish them all good luck.
Right, guys. Once again, ecommercetaxhelp.com, ecommercetaxhelp.com. And also you can reach out to support@dropshipquick.com, support@dropshipquick.com. Mark, thank you very much for your time. We appreciate it immensely. Have a wonderful day, evening, or afternoon, anybody, wherever you are in the world. Thank you. Bye-bye now.